Hi, I am Emma with AQUA Real Estate. Today we will discuss one of the more challenging topics, Form 22A. Financing Addendum. In this lesson we will cover these three topics. We start with qualifying the buyer. Then cover the loan application process. And lastly we will finish up by covering the waiver of financing clause. If a buyer is obtaining a mortgage to purchase a single-family home or condominium, you will include NWMLS Form 22A. There are a few steps to follow before filling in this form. First, you will want to contact the buyer's lender prior to writing an offer. Even if the lender has provided a pre-approval letter with some financial details, it is imperative that you reach out and confirm to get a better sense of your client's financial position. Here are 6 questions you will want to confirm with the buyer's lender before writing your offer. The maximum price in which they are approved. The total amount of down payment. Ask if the down payment has been verified and if there are any contingent funds being used as part of the down payment. The loan type. Are any closing costs needed to be paid by the seller? If yes, then approximately how much? And ask the lender to give an estimate on how long will it take for the bank to close the loan. It is important to always consider a worst-case scenario so that the buyer's earnest money is fully protected. Let's take a look at our next topic, the loan application. Now that you have all the information you need, you can begin filling out the form. In paragraph 1A of the financing addendum, you will fill in the type of loan and the amount of down payment the buyer will need to bring at closing. It is important that you have the buyer disclose the amount of down payment in the form of a dollar amount or percentage. Do not write minimum down or to be determined. The purpose of the financing addendum is to protect your buyers from losing their earnest money deposit in case their loan is not approved. A financing contingency creates a legal reason for the buyer to rescind the transaction and retain their earnest money. But only if the financial information is disclosed properly. A down payment is the cash that the buyer needs upfront at closing. It is important that when writing the offer that you do not include any money that is the result of contingent sources of financing as part of the down payment without disclosing the source of those funds. Be sure not to mistake non-contingent funds with contingent funds. It's very important you understand the differences between the two. Some examples of contingent funds would be a gift from a family member, proceeds from the sale of unliquidated stocks or Bitcoin, any pending sales of personal property, proceeds from the sale of real estate. Contingent funds require written disclosure to the seller by using NWMLS Form 22EF. Please note that if the sale requires proceeds from the sale of another real estate transaction, then use either NWMLS Form 22Q or Form 22B depending on the situation. If you want to learn more about those forms in detail, please check our training videos for those forms inside AQUA University. Let's review the rest of the details in Clause 1A. The contract states that the buyer must make a loan application with a lender within 5 days following mutual acceptance. Within that 5-day window, the buyer may choose to change lenders at any time so long as the application is submitted before the deadline. The buyer does not have to continue working with the lender that gave them the pre-approval letter that you submitted with the offer. However, the buyer may not change the type of loan or the amount of down payment that was written on the contract. If the buyer would like to change the loan type, the amount of down payment, or change the lender after the 5-day period, the buyer will have to do so with the seller's permission. Use Form 22AC to request any changes. Moving on to our final topic of the day. Waiver of financing. Let's look at paragraph 1B. In summary, this clause states that if the buyer breaks any of the rules in paragraph 1A, then the buyer has waived their financing contingency. The buyer better hope that the deal will close on time. If their loan doesn't get approved or was delayed, the seller would likely be able to keep the earnest money, even if the appraisal was low. If there is anything you take away from this training, I want you to be super sure you understand your client's financial position before you write an offer. Ask the right questions to your buyer and the lender to make sure you are all on the same page.
Be sure to check out our other great training videos inside AQUA University. Hey there, are you watching our training videos but not yet an AQUA agent? We would love to have you. Our 100% commission model, world-class training systems, technology, and marketing make AQUA the coolest and fastest growing brokerage in the Northwest. Go to our website, getaqua.com/careers to learn more. Join the club.